Bitcoin is preparing for another short-term move. In today's video, we're going to be discussing not only the macro charts, but the short-term charts as well. By the end of today's video, you have a detailed understanding of the macro uptrend, the short-term expectations, and everything else that you need to know about what is happening and why. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are diving deep into the macro and short-term charts, leaving absolutely no stone unturned, going over exactly what is happening, the key levels you should be paying attention to, and the next likely moves for Bitcoin. Are we going to see a continuation into the low $60,000 region, or are we going to see a correction moving into interest rate data? Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram with over 6,000 members. You'll get access to charts, updates, videos, educational posts, analysis, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you're interested in taking your trading to the next level, you can join us in the VIP channel. You can see 639 members. We post trading setups such as this Bitcoin long from yesterday. You can see justification, exact entries, exact targets, trade justification, like we said, and everything you really need to, stay in the loop and trade these signals effectively. We post not only our trading setups, but we also do have group chats, our general chat, our trading chart and education chat, our news, daily video help, and trade setup chat. Again, you can get access to all of that by contacting me in the pinned comment of the free channel by clicking my name or these links for more information. Let's go ahead, guys, and jump on into the video. So as we can see, Bitcoin has had a very, very healthy short-term bounce since yesterday's video. And in yesterday's video, we discussed that we were retesting a critical level of support, which was at 57.3K region. We talked about how in yesterday's video that this level marked a short-term trigger point where if we were to break down, we would see a directional continuation likely to retest 56 and even run the risk of a continuation toward the range low of this macro descending channel. But we said in our video yesterday that we were expecting a bounce from here for Bitcoin, and we were expecting that to be the bottom because we saw bullish divergences developing, and we had the price action retesting a critical horizontal level. We've seen a bounce from there around 3.7%, touching now 59,000. The big question is, will Bitcoin continue upwards? Are we going to see a move back to 62? Are we going to see a move back towards that midline, or are we going to crumble? We're answering that in today's video in massive detail. Moving over to the market data, we'll come back to Bitcoin. 24-hour volume down 1.7%, 98 billion. 24-hour liquidations down 50%, 80 million. Of that 80 million in liquidations, 31 million have come from longs, 48 million have come from shorts. Looking at the DXY is still moving slightly upwards over here. Again, we are looking for a possible retest of that yearly uptrend. If we do retest that level, we will be expecting rejections from that region for the DXY to initiate that next leg down. To see that macro continuation lower, we are watching for a loss of this 2-year-long support level. Should I say year and a half? A year and 8 months. This is from literally January 2023, this horizontal low point we are watching. If we lose that level, we break down, we then expect a macro continuation lower. Again, we have broken down from a symmetrical triangle formation, which of course, as we know, is a neutral pattern. A breakdown results in a directional continuation in the direction of which the breakdown occurred, and therefore, while we remain underneath this yearly uptrend, we are expecting macro continuations downwards. Again, the reason this is valid for Bitcoin is that when we see the DXY falling, we know that money is generally flowing out of the dollar, most likely flowing into risk assets. We generally see on the macro scale, not on the short term, but on the macro scale, when we're looking at macro directions for the DXY, they generally are inversely correlated to risk assets. So if we do see a macro directional move downwards during that time frame, we will likely see a macro directional continuation upward for Bitcoin. So moving over to the S&P 500, a good weekly close. Again, like we said in yesterday's video, we are starting to see these bodies starting to shrink and our wicks starting to increase. This is telling us we're starting to see a little bit more resistance occur up in this region, as well as a little bit more volatility as a consequence of indecision in the price action. This is pretty standard as we approach support and as we approach resistance, but it is telling us now that the S&P 500 is getting closer to that resistance. We do know that resistance to be the price point of 5,680 to 5,720. Again, this weekly high point, a break of the weekly high will result in a continuation higher, whereas if we do fail to do so, we could see rejections possibly as low as 5,300. That is a possibility. However, I do not think it is very likely. If we do see that move downwards, this is a critical support level. We are in this horizontal chop range over here. If we lose 5,300 at that point, I would be concerned, as we'd be entering a high time frame downtrend. That is it for the S&P 500. In today's video, we are diving deep, guys, into the daily price action, the short-term price action. We're going to be discussing the next moves of Bitcoin. We're going to be discussing the macro charts, what you need to be paying attention to, Bitcoin dominance, and the total. Before we do get into it, if you are interested in supporting the channel even more, if you enjoy the content, you've been following for a while, support the channel by signing up to the links down below, BitUnix, BitGet, and BingX. You'll get 15% lifetime guaranteed trading fee discounts. Now, depending on your trading volume, that can actually build up to 45%. So if you're a regular trader, you can get a pretty significant trading fee discount on those exchanges. It has saved me well over $100,000, probably even much more than that, honestly. Probably even closer to 500, but you can, again, depending on how much you trade with, it can save you a fair amount of money. Sign up down below, use those links, support the channel, check it out, we'll play an ad, and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So starting on the higher time frame, breaking it down, the weekly chart is what we're going to be starting on. And in fact, I want to take a look at the 2-week chart for Bitcoin. And there's a particular level I really want to focus on, which is going to be our horizontal level of support, which lines up with the Ichimoku Cloud baseline. This horizontal support is at 49,000. Now, if you do remember back to that $49,000 retest, you would know that literally at 49,000, we posted on Twitter saying the bottom is in, and we saw a 36% rally from there. Fantastic move toward the upside. Nevertheless, this level of support is a critical region. This is going to be the high time frame bull market support, in the sense that if we were to drop below this region, we would, by structural definition, result in deviation below this yearly resistance and enter a high time frame downtrend, entering a official bear market. I do not think we're entering a bear market. I want to make that abundantly clear. Some people got misconception from yesterday's video. We can discuss what would occur if we enter the bear market while not being bearish. We're definitely not bearish. We're macro bullish. We're being very clear. We are in a macro uptrend. We'll discuss it in a second. But if we do lose that level, we will technically be entering a bear market. It's important to identify the opposite of what you want to happen or what you think is going to happen, solely so if it does occur, you're not left there wondering what the hell is going on. You're prepared, you're planned, you can execute. So we're looking at this line. This is going to be our baseline of our Ichimoku Cloud. Now, there are instances where we have broken above the baseline and back below it. Again, this is our COVID-19 correction. We also saw strong deviation over here in 2021 as a consequence of this cycle being accelerated. This is mainly because of the meme coin hype, the GameStop stock going up a lot. We had a lot of adoption and a lot of hype on Twitter from public figures such as Elon Musk. Anyway, we had the market go up a lot and it overextended, so we see overcorrections. But when we line up the Ichimoku Cloud baseline with our traditional 4-year cycle phases, the bull run phase, accumulation phase, and bear market phase, what we notice is that a loss of the 2-week Ichimoku Cloud baseline after the bull run phase has concluded. Again, our 4-year cycle phases are as follows on this page over here. We generally enter, well, not generally, we from 100% certainty based on historical data, we enter a macro downtrend. And those macro downtrends historically has resulted in us entering extended bear markets. Now, on the flip side, when we break back above these levels, we enter bull markets or macro uptrends. So we can use the baseline of the Ichimoku Cloud as a gauge for the macro high time frame general direction of the trend. So we can say while we are sitting above the 2-week baseline, we are in a macro uptrend for Bitcoin, and that remains a fact while we remain above it. And therefore, no matter what happens over here, we are in a macro uptrend, expecting macro continuations while that baseline is able to sustain. And the reason we're talking about this is because the baseline lines up with the confluence point of that horizontal support level, which is a yearly level of support. So we have 2 points of confluence over here, where if we were to drop below, we would enter a high time frame downtrend. It's important to identify that. So Bitcoin objectively on a high time frame is still bullish. It is still in a macro uptrend, and we can utilize the Ichimoku Cloud baseline to not only validate that statement, but to be used as an invalidation of the trend itself. Moving to a weekly chart, we are taking a look at the RSI. The RSI, a fantastic indicator, my favorite indicator over here. We're using this one to gauge momentum in price relative to the price point in time. We can see that this particular point lines up with our retest on the RSI, and we can see the downtrend on the RSI here lines up with the price action during the last 5 months of consolidation. What this tells us is that the momentum in this period of price action, which is over here, is greater than what we saw back in the retest on September 23. This is telling us that during this period of the uptrend, momentum is generally still rising on the macro. This is a good sign. Now, if we were to see a breakdown, that would tell us the price action is generally overextended in comparison to the momentum and the price action historically, which could lead to a correction in the price action. That is a warning sign. But however, guys, while we remain above that low on the RSI, we are actually seeing bearish exhaustion develop, nearing the apexing point of the horizontal and the diagonal while we are in this descending channel formation. This is telling us that the momentum is slowing down. The bearish momentum is slowing down. If we break upwards over here, that would tell us that the bearish momentum, which has been exhausting, has flipped into bullish momentum, and we will likely see a continuation upwards. So we are watching for a weekly breakout of that RSI to validate to us that we are going to likely see a continuation to retest the range high of the channel. So as we can see, guys, there are a lot of signs on these charts that Bitcoin is still in an uptrend. We are just in a high time from consolidation. We are getting close to invalidations, hence the indecision, hence the fear of corrections, hence the fear of us going into a bear market. Those fears are popping up. I'm seeing it more and more and more. But in essence, we are in a macro consolidation above a yearly level of support. Momentum is about to flip back positive. And the trigger points we look to validate the uptrend are still intact. They have not broken down. The weekly Gaussian channel, we are sitting above the upper band. The 3-day Gaussian channel, another fantastic indicator. Once more, we are sitting above the lower band of the 3-day. We lose the 3-day lower band, we are going to be in a little bit of trouble. The last time we did the equivalent on the top side was back in January 2023 when the uptrend started. But that level, as of right now, is still being defended. Now, you can cherry pick data from like an 8-day chart or a bloody 17-day chart, or you can bring up any kind of chart to cherry pick data and to try push a narrative that you want to push. That is very, very plausible. That is something you can do. And again, if I were to bring up like a 1-day chart, for example, I could say, well, look, the Gaussian channel has broken down. We are underneath the Gaussian channel, therefore we are bearish. But it is not just one indicator that defines the trend. You have to contextualize everything you see with a variety of different indicators, applying the context of where the price action is to then come to a logical conclusion. Just looking at one particular indicator alone and then saying we are going down because of this indicator is not a strong argument. No matter how you phrase that argument, it is not a strong argument. It is definitely not strong enough data to actually risk your money on either. So again, pay attention to that as well. You have to use confluence, whether that be confluence historically or confluence of other indicators or confluence with context of the price action. Moving over to the daily chart, again, descending channel formation. I know I've been saying it for a long time, but it is the reality. The fact of the matter is Bitcoin is in a 5-month long consolidation. We don't control the market. If we had it our way, I'm sure every one of you guys watching right now, you would be like, I wish Bitcoin would just break out of this bloody consolidation, right? If we had it our way, we would say that, but we don't control the market. We are subject to the market. We are subject to the confines and the movements of the market as everyone else is. Just as I'm talking about it doesn't mean I can control it. The fact of the matter is Bitcoin is in a 5-month long downtrend. It is in a descending channel formation. A descending channel formation objectively is a consolidation pattern. What we know from descending channels is that descending channels operate between two parallel downtrends. Therefore, we are in a downtrend while we're in it. The price will gradually decrease. We can objectively state that the angle of the trend, okay, is actually not that great. This is not a steep downtrend. It is actually quite a weak downtrend. We can also note that even though we've been in this downtrend for 5 months, we're basically at the same price of which the downtrend the trend initiated, which is going to be the entrance of the channel is basically the same price we are sitting at. We have basically pushed sideways in regards to the entry price of the channel for the past 5 months. Now, the descending channel formation is a bullish consolidation pattern. Again, we can use that RSI in the weekly to validate that. We see the RSI is generally moving downwards, but it is moving to a point of which it could flip back positive. Where is my chart? Here is my chart. So if we do set an RSI flip back positive and we do see the range high break over here, we will very likely see a directional continuation upwards. But once again, you should not be expecting this move until the range high resistance breaks. So while we sit between the range high and the range low, you should be expecting the price to continue to chop around. But it is important to understand that while we sit within this channel, and by within this channel I mean between the range high and range low, the macro expectation is an eventual continuation higher. The only thing that can eradicate that expectation is an invalidation of the structural consolidation, which would be a breakdown of the range low. A daily candle underneath the range low would invalidate that and result in a continuation toward that 49K support, which is going to be the 2-week baseline. It would result in a breakdown of the 3-day Gaussian channel. And of course, that would result in a high time frame downtrend initiating, which poses the risk of a bear market. So Bitcoin really doesn't have much downward move over here. This sideways consolidation has been catching Bitcoin up to these lagging indicators, which were massively overextended when Bitcoin was up over here back in March. So we're seeing this converging point between the price action now and these indicators, and the closer they start converging, the more uncertainty we're going to start to see in the market. Moving to the short-term price action, what we can see over here is a fantastic bounce. We saw a bullish divergence present. The bullish divergence resulted in, again, an indication that although the price was going down, we started to see some bearish exhaustion, we started to see selling pressure decrease, and we started to see buyers step in, which resulted in a continuation back upwards. What we are seeing here is a classic move here for the EMAs. We're looking at the 50 EMA particularly. This is what I like to call a 2-point compression. Is generally what we see is that we see volatility significantly initially increase as a consequence of the loss of the 50. We then come up to retest the 50 only to reject, and what we see from there onwards is the volatility is starting to decrease as the price is compressing again, hence the 2-point compression against that 50 EMA. We are watching that 50 EMA now to flip, and if we flip it, we are likely going to see a continuation into the next horizontal level of resistance, which is a 61.2. I am expecting this move unless Bitcoin breaks back below 57.3. So a loss of 57.3 in my eyes would invalidate this move for Bitcoin, and we would then likely see an extended correction back to 56 and potentially lower. But while we remain above 57, while and how the price action is developing, I am expecting a continuation to 61.7, 61.4, 61.3, around about that region. Okay, guys, that is it for the short-term price action. Again, something I really like to do, a really handy tip, bit of a secret tip, if you don't mind me. I like to invert the chart sometimes. And the reason I like to invert the chart is because, particularly as a new trader, and this is particularly handy if you are new, and I even do it still because I find it's very helpful. It helps you check your unconscious bias. Now, you have conscious bias and unconscious bias when trading. Now, generally as humans, we look for shapes, we look for patterns, we look for things that are recognizable. Ever since babies, we are looking at facial structures, we're identifying shapes and patterns. That's how we recognize things, right? So it's only natural that as a trader, you subconsciously, whether you're aware of it or not, you look for patterns in the price action. Particularly, you will hear statements like, oh, it looks like it's going to do this, or it looks like it's going to do that. And those are built on your subconscious bias. So a good way to check your subconscious bias is to look at the price action, identify an expectation. So for me, my expectation is that we continue upwards here upon the break of the 50. And then what you do is you flip the chart, and now you look at it from the opposite perspective. Do I still expect Bitcoin to go in that direction? If my answer is yes, it means that I do not have some subconscious bias clouding my expectation. And if my answer were no, actually I expect Bitcoin to go up from here, I would then know that I'm making or I'm justifying my reason for that movement based on how it looks, rather than what it is. And that is very important, guys. So thanks for checking that out. Thanks for tuning in. Hope that it does help you a little bit there. If you are interested in learning how to trade a little bit more, actually, head out down below to the links. Crypto Academy courses, we have a sale on for our 10-unit trading course. It will teach you the beginnings and some advanced stuff of TA, specifically market patterns, candlesticks, a bunch of indicators. You'll go about 12 different indicators in massive detail. By the end of it, you'll have a very detailed understanding of the foundations really to build your trading career if you are interested in technical analysis. So check that out, guys, and we'll catch you guys in the next video. See you then.